I am surprised that not much more people are talking about Hyperliquid. Hyperliquid is changing the way the majority of people are now trading. In the early days, everybody traded on the spot market, either on a centralized exchange or on a decentralized exchange via Uniswap. Now recently, in the last years, we have seen perpetual futures or bets with leverage on the price growing much quicker, and Hyperliquid is dominating that market in decentralized finance. In this video, we're going to look at the on-chain metrics. We're trying to find out where Hyperliquid, or the price of Hype, will go from here. We're trying to figure out where it is relative to other cryptocurrencies and whether or not it still makes sense to buy Hype. Now this here is a chart worth noting. This is the total value locked, the TVL on the Hype chain over time. It's constantly growing since April of this year. And it's not just constant growth, it's also the pace of growth that's impressive. We went from a TVL of around 300 million to close to 3 billion within the span of just a few months. Hyperliquid is now the fourth largest decentralized finance protocol, if we even count Wrapped Stake ETH and Lido Staked ETH as DeFi protocols. It's about to flip Chainlink, which is the leading oracle, so the leading data feed in DeFi. And we've been talking about Hyperliquid regularly on this channel here. Here's the total value locked of the Hyperliquid platform itself. So we don't look at the entire blockchain, we just look at the perp exchange. And what we've got over here is the trading volume of the perpetual futures market. Now, perpetual futures are just bets on the price. So we're not buying and selling any cryptocurrency, we're just betting on the price development of cryptocurrencies. Now, why would we do this as opposed to just buying and selling the token? It's because we can bet on rising prices and on falling prices, and we can do that with leverage, and we tend to have very narrow spreads, as in buying and selling doesn't cost too much money. It only costs a lot of money to hold a token over the long term. But if we just short-term speculate, using perpetual futures is the more efficient way. And because of that efficiency increase, we see all of that growth. Now have a look at the trading volume on the decentralized exchange spot protocols. For example, here let's compare the beginning of 2023. Here the decentralized spot trading volume was at around 2 billion or so. Perpetual futures had a trading volume of around 1 billion, potentially a bit less than that. Now the spots tend to trade at around 20 billion, while the perps have similar size. So the perps seem to have grown at least by 2x relative to the spot market. The thing is, the spot market is much more fragmented, as in there are many protocols that offer spot trading. The perpetual futures market, though, is much more concentrated. Have a look at this. Blue is Hyperliquid. It was not very relevant in 2023 or 2024, but 2025 was the year where Hyperliquid started dominating everything else. Have a look at the top 10 and their market share in terms of trading volume. Hyperliquid is here, this area in turquoise. It's at around 60% market dominance. Yet when we compare the trading volume on Hyperliquid relative to the centralized exchanges, for example Binance, there's still a lot of potential growth ahead. So the bet when buying Hyperliquid is not necessarily that Hype will take up more market share within DeFi. The bet is rather that Hyperliquid will take more market share versus the centralized exchanges. That people will speculate less on the Binances and Maxis of this world and move over to self-custody, to Hyperliquid. The weekly Hyperliquid trading volume relative to the Binance trading volume is only 10 to 90%. So there's still a multiple X of potential growth. This here comes directly from the Hyperliquid website itself. This is the trading volume over time. And here is the open interest over time, which is now close to $14 billion. So that's the measure of how many bets are currently made on crypto prices. Of course, most bets are made on Bitcoin and on Ethereum. So it's not just that there's a lot of trading happening, that there's a lot of arbitrage bots. It's also that many people are taking medium-term positions in various assets. And so it doesn't matter what metric we look at, Hyperliquid's growth is strong and healthy. Now, I personally use Hyperliquid myself also very actively, but I try to be as objective as possible on this channel. And so we have to look at the potential bear case as well. What could potentially depress the Hype price? And that is, unfortunately, yet again, tokenomics. We have seen similar projects with similar setups that unfortunately did not perform that well. Here is the number of circulating Hype tokens over time. So far, the number of circulating hype has not increased, and that has helped the relative price. We're going to look at relative prices in a second. That will change though. We will see the first unlock by core contributors in just 2 months. And the question is, how aggressively will the team actually sell their hype? Are they betting on future growth, or are they actually starting to exit? Before Hyperliquid, one of the leading decentralized perpetual futures exchanges were DYDX. And this is the tokenomics of DYDX. So this also went up over time. And here is what happened to the price. It went from $4 all the way to 61 cents. So that's a problem in general with many crypto projects. We tend to have a growing supply, but if the demand doesn't grow as quickly, we've got a problem. Now, why might demand not grow as quickly? Maybe because the token itself doesn't have much more use. Maybe it's just for governance, or maybe because the competition is getting stronger and stronger. New competitors arise that take away market share. There's all kinds of risks, and DYDX unfortunately fell for those risks. The price performed very, very poorly, especially when we consider that crypto as a whole went up during that time. And so here is the hype token relative to Ethereum. We are not looking at DYDX, we're now looking at hype, and this is outperforming quite consistently. And we are rather at the lower end of the trading range with a potential gain of more than 60%, maybe even 80 to 90%. But again, so far we haven't seen any token inflation in hype. Here's hype relative to the others market cap. So how is the hype token doing relative to all other altcoins? And that's growing even faster because Ethereum had quite a bit of a rally recently with all of the ETF inflows and the treasury company purchases. Again, on this relative valuation chart, we see not a lot of risk, but potentially quite a bit of reward. Now, what's the incentive to buy hype besides just betting on the platform? Why would somebody buy and hold the hype token over the long term despite the token inflation? Here is one of the reasons. There is a staking program for the hype token. The more hype is staked, the lower the trading fees on the platform are. And there's different levels to it. There's only 10 hype that already gives a 5% discount. 100 hype gives 10% discount, etc. This here is worth $500 roughly. This is 5,000, 50,000, etc. There's quite a bit of fee discount if people are okay with the price exposure to hype. There's a way to potentially arbitrage the system a little bit. As in, the hype can be staked, and at the same time a short position on hype could be opened, so that then the position is completely delta neutral. There's no impact of the hype price on the portfolio, and still all of those trading fee discounts apply. Betting on rising prices of hype now costs 11% per annum. This is what goes to the shorts. So if you're buying the hype token, you stake it, and at the same time you short it, you still get the discounts for trading, and you get 11% APY on the short position. It is a win-win if you, of course, consider the Hyperliquid platform relatively safe. And so it's interesting that not more people are doing this arbitrage. Again, the funding rate on hype is currently positive. It's positive most of the time. I believe this is because many people that use the platform are in general quite bullish on the token. So have a look at this. This is a vault where somebody is shorting various altcoins and is just longing Bitcoin and hype. So far the strategy didn't perform that well, but in general we do see a lot of long interest in hype because the users of the platform are quite happy with the product. And so over time the open interest on hype is also going up. Unfortunately, there is of course positive correlation between open interest and the price. As there's more short-term leverage in the price tends to go up. And that's a potential risk. If the people that currently bet on hype only do this for the short term and they don't do this for the long term, and the open interest suddenly goes down, then the hype price might follow that. Now here's the problem with investing in this market. There's in general two major forces that impact the prices. On the one hand, we've got the macro environment. Where is Bitcoin, Ethereum and Solana going? Then on the other hand, we've got whatever happens idiosyncratically to a specific altcoin. Now the problem is most people can't make constant gains because most people aren't really segregating among those two influences. So if you're just riding the macro environment, you can just go with Bitcoin, right? You can buy whenever the current price is below the realized price. Whenever we are below the average cost basis of the market is historically the best time to buy. Of course, currently we are very far away from that. But in general, approaches like this work quite well to time the macro. Or we can even go a bit more complex. We can use things like the CBBI indicator, an indicator that aggregates all kinds of other models. And it also shows us pretty well when we are potentially expensive or potentially cheap in the market. The reason why those indicators are great for macro timing is because it tells us how much we should potentially be invested in crypto. We should have very high allocation over here, maybe 30, 40, potentially even 50% of our entire net worth in crypto. And we should have the exact opposite when we are up here, right? Maybe only 5 to 10% of our net worth in crypto. So we can always adjust based on models like this, and we can play the macro. And for the macro, we can just go with Bitcoin because Bitcoin tends to outperform most altcoins most of the time. So that's one approach to make money in crypto long term. And I think that's the most straightforward, easiest approach for people that just start out with everything. But then there's also the approach of higher risk, higher reward, of using the altcoins. But this is now the Bitcoin price that we see at the top. What we now see at the bottom, that's the altcoin market cap. And just have a look at how similar those lines look. When Bitcoin is going down, the altcoins go with it. So even if you take the best altcoin on the market, even if you figure out that the fundamentals of project A, B, and C are the best and that they are doing long-term better than the rest, if Bitcoin goes down, if Ethereum goes down, then the best altcoins go down with it. And that's the problem. There are times when everything is going up and there are times when most things come down. And it seems like the asset selection doesn't matter as much compared to timing the macro environment. But then again, we are back to just trading Bitcoin. If you want to just get macro exposure, we just might as well buy Bitcoin, buy and sell Bitcoin. So really, we want to find a way to bet on an altcoin without the macro environment. We want to neutralize the macro environment, and we just want to bet on the outperformance or the underperformance of a certain altcoin. I'd make the argument that it's actually easier to bet on the underperformance of an altcoin. Because have a look at the altcoins in the last year. Bitcoin, of course, in the last year almost doubled, and the vast majority of altcoins underperformed that, right? We've got 1, 2, 3 altcoins that did similar to Bitcoin, maybe a bit better, but the vast majority did worse than Bitcoin in the last year. And for some altcoins, that happens rather consistently. This is Balancer relative to the others market cap. So how is the Balancer token, a decentralized finance protocol token, doing relative to all other cryptocurrencies? And it's going down consistently. Now, the reason why this is going down is fundamentally driven, as in there's more and more tokens that hit the market over time. There's a high token inflation, or the tokenomics are not that good. Here is the Balancer tokenomics over time. We started out with 20 million tokens, and now that went up all the way to 70 million tokens. And that then has this long-term underperformance as a consequence. And so I like to take advantage of market inefficiencies like this. I like to bet on falling prices of Balancer relative to, for example, Bitcoin. Because then we can turn around this chart. This chart turns into this chart here. This is now Bitcoin relative to Balancer. So we bet on rising prices of Bitcoin and on falling prices of Balancer at the same time. And we get this return curve over the years. So in the last 12 months, this went up by 186%. It actually did outperform buying and holding Bitcoin. And that's better than any straight altcoin pick over here, right? Among the small risky alts. None of them did that performance in the last year. And I also like how constant that performance is. Compare this with the Bitcoin price, right? Bitcoin during that time did go down by 77% at one point, right? The drop from 70K all the way to 16K. This relative ratio did not have those fluctuations. Here is the logarithmic scale, and the maximum drop from top to bottom was 50%. So we are appreciating faster than buying and holding Bitcoin, and we do this with less fluctuation over time. It's a better risk to reward. That's what we all should be aiming for. More return with less volatility. I'm following this kind of strategy already for 4 years roughly. Had I just dollar cost average into Bitcoin, I would have gotten the return indicated by the gray line. But because I also bet on relative valuations, on things like Balancer going down over time, I got the return indicated here as the black line. I understand it's not as straightforward as just buying an altcoin. There's a bit more complexity to it, but that's why I created dedicated videos on this. And I want to make this as easy as possible. So here's the idea. You simply watch 2 videos over here that explains the entire strategy, how to execute a relative valuation trade. Once you've watched those 2 videos, I will send you my favorite trade. So that favorite trade is very similar to the balancer token trade. It's going long Bitcoin, Ethereum or Solana, and it's going short the altcoin that tends to go down over time. Here are the 2 videos. It's using perpetual futures to bet on relative valuations, and it's risk management with relative valuation bets. In total, it's roughly 1 hour worth of content. So just watch those 2 videos, and afterwards, after you've joined the community, I will send you my favorite trade that performs very similarly to this chart here. And so here's the offer. If you do not make any money with that trade after holding it for only 1 month, then I'll refund you the membership fee, no questions asked. So simply just send me a message. I will just refund you the $125 per month. If you do make money, of course, with that trade, then feel free to just continue copy trading me, because I will not just share this one trade. I will, of course, share every trade that I do myself as well. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.